Hello, I'm Stephen Galpin and welcome to Property Question Time. This is the programme where you can have your property related questions answered by our team of experts. And joining me today are two of our most regular contributors, Byron Crellin, CEO of Clearway Debt Squared, commercial property service providers. Welcome to you, Byron.
Hi, Stephen.
And John Howard, property developer, author, investor, mentor, and
2.9 million views on TikTok.
Oh, wow. Well, there you go. Well, there we are. All we need to do is have a look on TikTok and to see what John's had to say.
Probably never happen again.
No. Well, good luck with that one, John.
Thank you.
Okay, well, look, let's get on with the questioning. And John, your first question.
Yes.
As someone who is new to the letting industry and a first-time landlord, can the experts advise me as to what qualifications or competencies I should look for when seeking out a letting agency with which I would hope to build a long-term relationship as my portfolio expands? And I mean, I think we've always said on Property TV, haven't we, that it's the experts that you put around.
Are you telling me?
Well, yes, I am really. It's the experts that we put around us, isn't it?
I think
make it work.
Yeah, we always say, don't we, that it's all about surround yourself with the best possible team, if you like. I hate that word power team, but you know, this is a trendy word that people use, consultants. What I say with lettings is that there's some very good property management companies out there. You want to make sure they're members of ALA, which is I can never remember what it stands for, but it's the regulatory body of management, property management associations. And it's very, very important that they're members of that. Also, if you just need to do a bit more research than that, because you need to make sure that one, they're not charging you too much. One quick tip I always ask them is how often do they go and check the property? Most of them will say once every 6 months. For me, that's not good enough. I want my management team to go and check it once every 3 months, because a lot of damage can be done in 6 months. So that's one tip I would say, and you want them to do that visit for free if you can get it. Anything in terms of commission, anything from probably 5 to 10%. There's a big range. I think we pay across the country. We've got different property management companies we use, and I think we pay, it varies from sort of 5% to 8-9%. So it just does depend.
Would that include management, John?
Yeah, that's it. Yes, that includes management, rent collection and management. Yeah. But it probably won't include finding a new tenant. They charge extra for that. Yeah.
Okay. I mean, I think today with the way legislation is, you can't really do without the professionals, can you? What do you think, Byron?
No, I agree. I mean, 95% of our database is managing agents.
Yeah.
So yeah, I think the viewer is brave to enter into the market if this is their first toe in the water in a turbulent time and a difficult market space.
I don't know if I agree with that entirely, Byron, but yeah, I mean
700 this quarter, third quarter, 700 repossessions confirmed. So that snowball.
Is that residential?
Residential. So you've got pandemic. You know, the courts are now, allowing landlords to take back properties. Yeah. So,
I'm struggling. I read the papers and you see people predicting doom and gloom, and is there going to be a crash? There is going to be a crash. There isn't going to be a crash. Some people are saying that property values, and I'll just take London for an example.
Why do you always take London for example, Stephen? I'm not being funny. There's the rest of the country.
John, we've had this conversation for 4 years.
We're going to keep having it until one of you come down for lunch in Ipswich, and secondly, you start thinking outside London.
Well, John, first of all, I'm not sure I can afford the petrol to go all the way to Ipswich, because unfortunately I've sold my electric car and gone back to petrol, which I'm probably going to get criticised for. But
yeah, probably
not.
That's number one. But number two, you must know very well that what happens in London actually just ripples out to the rest of the country over a period of 1 or 2 years. And what they're saying at the moment is that the dip in the London prices is because there's been an upsurge in London prices over the last 2 or 3 years, despite COVID, despite all the contrary conditions. And that's actually now happening across the country. And London, as is always the case, in front of itself, is now starting to dip. So that's why I refer to London.
I would have to agree with you that whatever happens tends to happen in London first, and the ripple effect comes out.
Yeah.
But it is a micro market, so you're going to get some areas that don't go down. I mean, I've got quite a lot of flats in Brighton in 2009, the last recession. Those flat prices in Brighton didn't go down at all. They haven't come up that much since, mind you. I've got others where they went down 30%, and haven't come back all the way yet, which is quite surprising as well. So it really does. It will be a very mixed picture. It's a micro market, and some people will be luckier than others.
I agree with you, John, but that's how the market is made up, isn't it? Of macro or micro markets. I mean, I can remember 20 years ago consulting on some properties in Brighton, and I've got to tell you you couldn't give them away to save your life.
You should have rung me.
Well, yeah, I probably should have done. You'd have had a field day with that. But no, you couldn't give them away for love nor money. It was only months later, there was a waiting list for them, This is how it goes. This is what happens. And this is why when people say to me, oh, the market's doing this, the market's doing that, I say, well, which particular market do you mean?
We track data. And so we're seeing UK footprints completely different. If you look, London is London.
Yeah.
And I personally, and again, we're heavily weighted towards the commercial sector, but I wouldn't necessarily look at London and say there's a trend coming. I think London is very much in its unique. There is, whatever happens in London, there's that overflow. But if I look at the northwest versus the southeast, then you look at retail versus startup and failures, it's completely two different landscapes. And you can't use that as an investor to say where my best place of my money. It's got to be tough. It's a tough market space.
It's hard wherever you go.
Yeah.
I mean, look how many people, and John, you will know this because you're close to government. People have been saying, oh, well, all you need to do is track the London Crossrail and buy in the areas where they're going to have a station. Well, that was the biggest white elephant ever. That hasn't applied. There's been no uplift. And it'll be the same with HS2. People say, follow HS2 because that will really boost.
Well, I think it's been all those things get priced in so early. It's a bit like the stock market, some stock, the announcement comes out and the stock, it's good news and the stock doesn't move because it was always priced in 6 months earlier or whatever. So it's just different.
Well, people have been telling me for 30 years that the east end of the city, is going to be the area. It's so trendy. It's so this, that, and the other. I'm still waiting.
Yeah. You do need to get out of London, though.
Yeah, you do need to. You do. Yeah. Yeah, try, have a go. See how you get on.
Perhaps I will come.
Broaden your horizon, see what the market's doing elsewhere.
I'm not coming up to Chester, but I might.
Chester's beautiful. Chester's a beautiful city.
Beautiful Chester.
Beautiful.
Right, on that note, we'll move on. Byron, your question. I'm a property investor and would like to hear from the panel their thoughts in terms of the 2022-23 outlook. With consumer spending potentially being impacted by an impending recession and inflation outstripping wage growth, do the experts predict more business closures, especially in the retail and hospitality sector?
Yes. Next question.
Right. Okay.
What's next?
I wonder if I can just tempt you to expand on that a bit.
So we'll continue with the doom
Wishes we
conversation.
weren't here today, wasn't he?
We'll continue with the doom conversation. He said smiling. That's not correct. Hospitality. 1 every hour is closing.
Amazing.
1 hospitality pubs. And that's in London and outside of London. Okay. Vacancy rates for this quarter have improved. That was the headline.
Right.
The movement being 0.01%. So vacancy rates now are at 13.8. Right. The worst is High Street.
Yep, bound to be.
Followed by shopping centres and then out of town.
Yeah. Big thing with shopping centres is the cost of running them, of course. Huge cost to run a shopping centre. It's massive money to run it, to manage it, and that's half the problem.
And the problem is that when 3 or 4 close quite quickly, it all of a sudden feels like a ghost town. Yeah. So the footfall drops.
Well, then it's a spiral, isn't it? Because you get 1 or 2 of the bigger ones closing who bring all the people in, and then the other ones there can't survive either.
But I mean, Byron, you know far better than I. I'm afraid commercial's not really my sphere of knowledge. But I can remember talking to somebody about Starbucks, and I was just asking about this policy that they sort of appeared to have at one time, was in a city centre they didn't want you to walk more than 3 or 4 minutes before coming across another Starbucks. I mean, it was sort of saturation policy, isn't it? But then we went on to talk about actual profitability, and they were saying, well, actually, you know, if you've got 10,000 shops, you don't need them to make a lot of money. If they make 50 quid each a week, you know, that's 10,000 50 quids. There's that sort of volume logic, but with business rates and rents being how high they are, I would.
But they're not. But they're not high. They're not high because what's happening, Stephen, is that when they come empty, they're being relet at half the rent they were let at to start with. And if you're charging half the rent you were, that gives people a chance to make some money.
But that doesn't alter the business rate, does it?
No, the business rate is a massive problem. And I hope this government will actually grab it by the balls and do something about it, because they've kicked it down the road for so long, this government. It's ridiculous. I would link it to VAT because it's a very simple way of collecting the money.
Well, the bank, COVID almost enabled them to mothball the issue.
Yeah, totally.
Commercial rent voids.
Yep.
We spent 2 years of landlords and tenants negotiating. They've had the arbitration process where it's been ring fencing arrears from March 2020 up to recent. So you've got that element where tenants now, or new tenants moving into vacant properties, are negotiating rent, where before it was a case of there's your lease. Well, that's how much it is square foot, sign it.
But they are.
And if you don't, I've got somebody else lined up.
They are, Byron. But what I would say is that in my my commercial portfolio, out of town, I'm getting rent increases. In town, I'm having to give rent away.
The problem is, I mean, the government can't really win because they can't please everybody. I can remember living in...
Pleasing some people might be handy, though.
Well, well, yeah, I can remember living in the West End of London. I had sort of quite a nice apartment.
Yeah, tough life, isn't it?
No,
London again.
It's tough, isn't it?
I haven't got it now.
No.
But you know, my council tax was the lowest of anywhere in London because it was being subsidised by the huge business rates from Oxford Street and Regent Street and all the rest of it. So you know, when that changed and the move started to spread over to residential as business rates were sort of
moved out,
capped. Yeah, well,
number of things. So you mentioned about a coffee shop.
Yeah,
there's a brand that is its business model is railway stations.
Right.
That was in the papers this Sunday. They've already appointed an advisor. I'll probably give him a week before all of these 3,500 out of a job. Hospitality is saying, you know, I mentioned 1 hour of closing in the pub trade, but they're saying that some of those now will not open in the day because of utility costs. They're paying too much already.
Yeah, and staffing.
We had a tenant contact us to put forward a payment plan, etc. We said, right, okay, so you know, we'll take this to the client, etc. His utility bills have gone up by £6,500. And he was saying, I'm having to reduce my trading hours, which means I'm reducing my
turnover.
And the landlord's like, well, something's got to have to give.
Okay, well, on that note, we're going to have to go to a break. So join us again after break, where I'll be asking Byron and John more of your questions and interesting answers, no doubt. Hello and welcome back to part 2 of Property Question Time. I'm Stephen Galpin and I'm joined by John Howard and Byron Crellin. John.
Yes.
Your second question. With regards to investment during a recession, I'm presuming that one's on the way, should I continue to invest? Can the experts provide any tips that will help me make good investment decisions during that coming recession?
Well, the first thing I would say is the saying goes, never catch a falling knife. Let it bounce off the floor. Let some other mug make the first move. In other words, that mug normally is me, by the way, because we're only really looking to buy property that's distressed, i.e. property that's where it's gone bankrupt, the receiver's in, Byron's in there doing security on it or whatever needs to be done. But that's a dangerous game to play. If you'd really, unless you're really experienced, that's a dangerous game to play. You know, we're looking at big discounts on what's been built, and then we're finishing the projects and so on. If you are getting into the market, if you don't know where you're going, why would you start driving the car? Why would you do it? Wait. If you think you can buy something for 200,000 today, it could well be 150,000 in a year's time. One of the best ways to know where the market's going is the auction market. That's the barometer for the property market. That's the cash and carry. When auctions start to sell more than 50% again, at the moment it's coming down to 50%.
So really?
When it starts going back up again, that's the time to start investing heavily on the basis that the rest of the market catches up in about 6 to 9 months' time. So look at the economy, look at car sales. New car sales start going back up again. That's another barometer I use. And be careful, there is no rush in this market. If you're looking to keep something for 25 years, buy something to keep it 25 years, you could argue, well, if I buy it now, it goes down a bit more, it will come back again. It will do. But surely you want to do better than that. You want higher standards than that. You want to be buying bargains. I've made more money coming out of a property recession, and it's happened 3 times in my career, than at any other time.
Well, I mean, I think we've said before, John, it's a very clever man that can read the very bottom.
Sure,
of the market,
absolutely.
isn't it? You know,
but I've given you some tips, and the viewers some tips of how to do it.
I think the other thing, again, that we've talked of before, it's all right people saying very glibly, oh, you can go on the internet and you can research, you can look at Zoopla, you can look at the figures for your area or what's going up and whatever.
Which you can do.
Well, it can, but of course those figures are 3 months behind.
Spot on,
they?
they're land registry figures. And when someone announces, oh, the market's gone down according to the figures from, one of the big Halifax or whoever it might be, those figures are 3 months old. So that's what you've got to remember. The auctions that's instant.
It's on the day, isn't it?
It's on the day. And that's how I do it, and that's how a lot of professionals do it.
Yeah. Well, I mean, it's a well-known fact, isn't it? People say if you want to know what something's worth, put it in an auction.
Exactly. Soon tell you.
Because that's the truth, isn't it?
Yeah. It's a tough gig.
We pick up a lot of distressed stock where perhaps inexperienced investors have gone into that market.
Yes.
New time, maybe first time, or have seen something on television and gone, we could do that. I can plaster it, I can build it out, etc. I know people that can do that for us, and it just becomes a real car crash.
A car crash. Little knowledge is dangerous, and there's a lot of ballsy people about, but they're ballsy because they don't know what they're doing.
You're far cleverer and more experienced in the sector than me. My simple, humble observation from the person that's going in and picking up this distressed stock and then
sorting it out,
pence in the pound scenarios, and basically going to an auction or a private bid scenario through a bank or an insolvency practitioner, is that if you're going to go into this market, you've just got to be brave, and you've got to be able to think, I'm going to basically ride my money and don't expect a quick return. Yeah,
but Byron, there is a difference between being brave and being stupid, isn't there?
Well, absolutely.
And I mean, John, I've looked at a number of your mentoring sort of productions on video and that
TikTok.
sort of thing.
Not the TikTok one.
Not the TikTok one.
And
you speak a lot of common sense and you act with a great deal of integrity when you put your information out there. And no, it's a pleasure, because I think you're a very genuine character. But there are a lot of people that are encouraging people on this sort of, oh, you can make millions, no need to use your own money, you'll be a millionaire overnight. Are these people going to come really unstuck in this recession?
I think the ones who are going to be in big trouble for me are the first time, not just first time developers, but the developers who have got projects half finished. They've borrowed a lot of money from the banks and probably other investors as well, because up till now, the market has got them out of trouble. But going forward, the market could drop 10 or 15% in their area, and the build costs aren't going to go down. So the difference between, if that's the profit and that's what it's cost, it can very quickly do that to a loss situation. And everything, and I get asked to look at a lot of projects where the bank are going to be called in or advice or whatever, and nearly everyone is the same. They've got nothing finished to sell. they've got 10 units or 15 or 20 or 3.
Nice brochure.
There isn't one finished. They're all in the same condition. And you need to get something finished, get it sold, and give the bank or your investors some confidence.
But even in the good times and everything going well, when you're a property developer, you do your block of apartments, all your profits in that last 10 or so.
Absolutely, your profits in the last 10 or so, and we've all made mistakes. You know, even in a good market, you know, you show me a property developer that's never lost any money, and I'll show you a liar. It doesn't happen. You know, you're doing 10 projects, you hope 8 out of 10 are successful.
Okay, thank you very much, John. Byron, your second question. Can the panel please confirm that the government restrictions on commercial rent arrears have ended?
Yes.
That's
The handcuffs are off.
Next question.
Yeah, next question. The handcuffs are off. Interestingly, the government put out a load of information in March 2020 when the pandemic was coming in, and introduced emergency legislation, and it was easily found. You didn't have to go looking for it. The government made no announcement that the regulations had fallen away. You literally couldn't find anything, and it was a document that was on the MOJ website that said
MOJ?
Ministry of Justice.
Oh, right, yeah.
So
you two knew what that was.
Test.
I do, yeah.
Well, he would definitely know that.
Yeah.
But it would basically, you found a document and it just said ended in terms of restriction, in terms of possession. So we've seen this now on the commercial side. So we've seen an upturn in commercial repossessions. Yeah. This is where landlords, commercial landlords and agents are taking back properties because the tenant, there is no recovery from the tenant, but also there's a pre-pack already gone on. So it's a case that they're flipping the property now to the new tenant. But the restrictions are there.
But don't forget, us as landlords, you know, we get the tenant back, the receiver, whoever it is, only has to give 28 days notice to us. That's right, isn't it? So we get the property back and we've got to pay empty rates on it. That's outrageous when you think about it.
But one thing I want to ask you, I mean, over the years, I've done quite a lot of work for receivers, and, you know, it wouldn't be the first time I've heard the sort of comment that receivers are actually accountants that really wanted to be SAS troopers.
Definitely, I agree with that.
They're quite brutal at times.
Some people say ambulance chasers.
Yes. Has the ethos changed, though, since COVID? Are they a much more friendly organisation? I mean, you mentioned this morning about somebody who's in talks with advisors. Well, a lot of us know, I think we know what that means.
Yeah.
It
we
means
know who it is as well.
They're talking to one of the big firms of accountants who will be encouraging them to go into an administrative receivership because the fees are big.
They're highly regulated, so it is a professional industry. Totally. But unfortunately, it's seen a bit like our world. You know, you're successful based on somebody else's failure. That's unfair. It's a sector. It's highly regulated, and the thing is an insolvency practitioner only gets their appointment by a company approaching them in most cases, unless it's compulsory.
But my question really is that somebody calls in the advisors, the potential receivers for advice, and they're in consultation with. Is it a one-way path to receivership, or has that ethos changed? Is there much more a sort of more constructive program that's available to people these days?
Do you think most people do it too late?
I think a high percentage of insolvencies that we, by default, get tagged to because we're chasing the rent or taking possession, or we arrive on the doorstep of the property to collect the rent.
You're like the Grim Reaper, aren't you? Really?
Thank you, John. DVD's available for Christmas.
Yes.
You've got a situation where we turn up, and actually, you know, this is an interesting stat. First year in the pandemic, Q4 saw the highest spike at Companies House of companies being created. Now that tells us they're creating a company. That's not just somebody I'll go into doing face masks, or something like that, or hand lotion. This is organisations, directors being advised by parties to say, park the debt, create a new co,
move it somewhere else,
go again. There is so much debt in the commercial sector that is now deemed to be unrecoverable.
Well, you know what? I think we could do an entire programme on this, but unfortunately, that's all we've got time for today. So big thank you to Byron Crellin. Thank you very much for coming down,
Stephen.
Byron. John Howard, thank you as ever
My
for
pleasure.
coming in. Great to see you both. I'm Stephen Galpin. Look forward to seeing you next time on Property Questions.